Hello everyone, welcome to yet another week analysis. So for this week, we're going to be looking for executions. Now, last week we were able to, execute. We were able to avoid taking a loss because of how our stop losses were placed strategically. Now, I remember saying this right last week that we needed to, we needed to see a break of, this neckline right here. This is the double bottom or rather equal lows, right? I remember saying last week we need to see a break of this channel right there. We needed to see a break of this neckline right here to be able to execute. Now it happened. We had this break, and then I placed a limit right here, and I placed my stops underneath this level right here. Strategically, my stop losses they go up under round psychological numbers. So it's not just random. It's not just a certain amount of people. No, they go under what round psychological numbers. So now for this week, we're expecting a retest of this neckline like so. We're expecting a retest of this neckline, like so, because this is basically a double bottom again. Like you have to train your eyes to see these things. Equal lows are double bottoms. Equal lows, just like so, are double bottoms. So for next week, and it's also a new month, meaning the monthly time frame is going to have to form a week. So we expect it to actually drop to the downside. We expect a drop to the downside, a retest of the neckline like so, and then a push to the upside. Now, this is the plan for Euro USD, right? It's as easy as ABCs, right? All we have to do is wait. All we have to do is wait and be patient. That's the most important thing right here. Patience helps us to avoid unnecessary losses. That's the best thing I can tell you about patience. It will help you avoid unnecessary losses. Now, on the DXY, this is the most important thing. Now, in as much as there are fundamentals playing in here, meaning the ceasefire is going to hold, even it's going to hold for even more than 30 days at first. Now it's 60 days. So we're expecting the drop of the DXY of the dollar, a weakening of the dollar for about 2 months. So for like 2 months, we're going to expect sales on the dollar, huge sales. We're going to short the dollar all the way down here. This because you need to understand this. We're in a range. The weekly time frame is in a range, meaning it has gone up, it has come down, it has gone up, and we're expecting it to come back down. Now, I remember saying, look left. What has happened in the past will happen in the future. All we have as traders is what has happened in the past. That's all we have. We have nothing else to hold the market against and say, oh, this has happened before. We're expecting it to happen. No, all we have right now is the past. Meaning, if you look left all the way here, you will notice that the first time the market came back down, right, it went up to the same area again, and then it came back down. Now we have to look left. We have to look what left. Now, after this hanging man, we had a huge drop. Now, it didn't happen as it happened before, but most important thing is it is happening. That's the most important. It doesn't have to be identical, but expect the same flow of the market in that direction. So after the doji like so, after the doji like so we could expect a push to the downside, and that is what has happened, a bearish engulfing to the downside. Now on the daily time frame, we have to train our eyes. I've trained my eyes. I know a double bottom when I see one. I know a chart pattern when I see one. I know a neckline when I see one, right? So we're expecting a push into into this area like so, we're expecting a push into this neckline because this is a double top. This is a double top, rather equal highs, right? Equal highs. When this happens, I'll then go to the Euro USD and let's look for sales to the downside to continue the short. There are multiple ways of entries, multiple necklines, right? Counter trend lines, off of areas of interest like so, just like so. There are multiple ways of entries. Now, the only reason why I'm looking for another entry is because on my challenge, or rather on the platform I'm using, I can't hold trades over the weekend. Now I have to close the trade and then execute again next week. It's hysterical, like it's just insane. But I do not see things as against me. I see things as they are for me, right? So these things help me to be able to even sharpen my eyes more, to be able to see spot trades, in places where most people would miss, right? So I'm expecting to execute again from this level right here and then short to the downside to continue the sales. So that's all for Euro USD, or rather for the dollar. We're expecting these things to happen, right? They may not happen, they may happen, but the most important thing is that if you approach the market with a plan, if you come in without a plan and just come on here on Monday morning and say, all right, now I'm looking for a trade, you're behind. In fact, you're likely to fail. So come in with a plan, and then you basically, those who plan, who fail to plan, they plan to fail. So we've come in with a plan. I've written my plans down. I've written my contingency plans down. Meaning, if this happens, I do this. If that happens, I do that. These are what I mean by contingency plans. You cannot just have a rigid, bias to the market. You should be flexible. You should be able to say, all right, when this goes up, I do this. When that goes down, I do that. Be flexible. Be realistic. That's the most important part of trading, or one of the most important parts of trading. So have a great week. Ciao, ciao.